So hello and welcome back to stage 2 here at FinTech LIVE London 2024. Really great to see so many people in the room and so many people I know also joining us online around the world. We try and build in as much time as possible for questions in every session. This one is no different. So just put your hand up in the room if you want to ask a question, and we'll get a microphone to you. If you're watching online, then just use the app and they come direct to me on the tablet and I'll ask the question for you. There is now a prize for the first person to put their hand up, to be the first brave person to ask a question. It's the first pick of the cakes out there that we've already been to. If you're watching online, the cakes here are fantastic. They're really good, just as reassurance. But no, there is time for questions built in, so don't be shy. But look, let's crack straight on with what we're here to do, which is to talk about business-to-business embedded finance. And two fantastic companies and speakers have joined us also, specializing in that area, Sage and Swoop. I'm not going to introduce you. You are much better placed than I to introduce you, except I'm going to say welcome, Andrea Reynolds, Chief Executive at Swoop, and Chip Mahan, Global Head of FinTech Strategy and Operations at Sage. Can I ask you to do a much better introduction to yourselves first, what you do and how you add value, particularly for your customers?
Sure. Swoop, I founded Swoop over 5 years ago, and it's essentially a data-driven platform for small and medium businesses to access every form of funding. That's across lending, grants and investment, and we also surface cost savings through your bank data. Started Swoop to remove barriers to access to finance for small and medium businesses, and why couldn't we deliver what you experience as a retail customer? Why couldn't we deliver the same experience for business? Swoop has grown incredibly fast over our life. We were the 14th fastest tech growth company in Europe this year, and so thanks to partners like Sage, we're beginning to really access a lot of customers, and we'll speak more into that as we go.
So Chip Mahan, as you introduced, so thank you. I head up the FinTech organization at Sage. Sage, as many of you should probably be aware, is a pretty big brand here in the UK. It was born out of two men in a pub, as I always say, in the north of Ireland. In the north of England. Apologize for being an Irish company. In the north of England, in Newcastle. And we've grown to be what we are today. So an accounting software servicing small and medium-sized businesses.
Excellent, thank you both. Well, look, let's kick off. Dumb question always gets the best answers. Why embedded finance?
I think for us, when we look at accounting and we think about our customers, right? Sage is in business to basically break down barriers for small and medium-sized businesses so that they can run their business day in and day out. And so we constantly are listening to the voice of the customer. And one of the voices that we hear from them is, cash is king, right? They need access to cash, and it's becoming more and more difficult because business costs are rising, and getting access to capital has become extremely hard for them. So when you think about a small business, they traditionally would go to their bank to get a loan, and now over 80% of the time they're being told no. So what do? And they don't know where to go. So what we do at Sage is we think about how do we solve for that customer problem. And the first thing we do is we get them, through one of our tools, a cash flow forecast, which allows them to understand what their position is today as a business and where their needs may lie. And then what we've done is we thought about, okay, well then what's the answer? How do we get them access to this cash that they may need or capital that they may need to run their business? And so we've partnered with Swoop, because it's a one-stop shop. It allows our customers to be able to go within our platform, within their accounting software. They can see their position, but now they have a solution for them to be able to say, okay, I need X, Y, and Z in terms of cash for my company, and now through the embedded solution that we have with Swoop, they can get access to all that.
And I think from our perspective, before I started Swoop, I worked for over 15 years raising finance for small businesses. And the key to any business owner in this room is you don't have enough time. You're putting out fires all day long, and then it gets to the evening or the weekend, and you're thinking, how am I going to fill this cash gap I see coming down the track? So when we started Swoop, it wasn't just about bringing the entire market together in one place based on your data. It was also about, we need to go where the customer likes to go when they're operating their business. We don't want them to have to waste another minute Googling, searching, applying for loans that they will never get. It's a waste of their time. And so we are able to meet our customer where they are operating in the moment that they see the need for that cash. So from a customer experience, it's removing more barriers for them, which is why we exist. For us as a fintech, and if there's any other fintechs in the room, when knowing what I knew about small and medium businesses, I knew I had to acquire them in a much smarter way. If I wanted to run a good business model, I couldn't just be throwing marketing dollars at Google and hoping they'll find me. This was about, how can I have better customer acquisition? So when we meet our customer where they are, we're meeting them under a trusted brand that they've been using for years. And the power of taking a trusted brand like Sage and powering that up with fintech like ourselves is incredibly powerful for us as a growing fintech. It's powerful for Sage because they've stickier customer engagement, and for our customer, they're getting what they need in the moment they need it. So it's a pretty much a win-win for all parties involved.
I was going to say it's a win-win for all parties involved, exactly that. And it's a win-win, presumably, for all the finance houses who want to meet the customers
exactly
too.
That.
It's perfect meshing. So can you give me more examples of your products and the success that it's brought? Perhaps brought yourselves, of course, but also brought your customers.
Mm-hmm.
So I think when I think about that, some of the use cases we have today. So we started out with Swoop. We've created a connector today in terms of where we are. We've connected that into our cloud-native products. So for small, it's Sage Accounting, both in the UKI and in the US, in North America and Canada. And then secondly, in our medium segment cloud-native product, which is Sage Intacct, and that's UKI, US, and Canada. And there, what we've done is through this connector, we've allowed our customers, through their consent, obviously, to initiate a call, if you would, back into their general ledger, where Swoop then comes in proactively and pulls data sets from the GL for the types of things that lenders are going to need to understand in order to qualify for loans or grants or other types of activities. And then proactively positions that back to the customer based on the customer's request to look for something like that, and puts it in the hands of the customers to make the choice. So they'll have 3, 4, 5 different lenders. They'll tell them what the loan amount can be, what they're qualified for, what the terms are, and then it's a customer's choice at that point to provide that decision point. We also do that with our accountants because, as you know, the accountant's the trusted advisor of the customer. And so through our accountant channel, we arm them with this same information so that they can go back to their customers, and you can talk a little bit about how you've done that in your Sage or Swoop for Advisors. But they can go back to their customers and provide them consultations on, here's the type of loan that you're eligible for, here's a grant you may be eligible based on the vertical that you're in, here's the timing of it, here's the terms of it. And so it really provides a full one-stop solution. Years have gone through, or through the years, you will find that accountants, for example, spend inordinate amount of time researching for their customers. Where can I get access? They have to fill out 12 different sets of forms, and they're different forms for every bank or every financial institution. Now they can do one stop with everything, data from the general ledger, which is the formal record that most lenders are going to look for anyway.
Mm-hmm. Yes, and from Swoop's perspective, like embedded finance is at a very early stage in the journey, and so we've had certain, like banks, for example, we have 2 of the major banks here, NatWest and Lloyds, who have dipped their toes in with us, and they've taken a white label of our grants module, you know, and that's been great. It's great for their customers where perhaps they weren't able to help them with a loan. They're then able to surface grants for them, and you can combine a grant with some lending lending to reduce your cost of capital. So that's been very successful. But kudos to Sage. They want to take it one step further. They wanted to be completely data-driven. So let's take from the GL, that's every time you apply for a loan, they're going to look for your latest management accounts, etc. Everything lives within the Sage software. So for us, we're reducing that friction. And as Chip said, one of the big drivers for us are accountants. We see accountants as the new bank managers. There are no bank managers anymore. If there are any in the room, apologies, but that's how a small and medium business feels. So they go to their accountant now. Accountants are moving from a compliance-driven role to being a trusted advisor. We need to arm them with the tools, and it's a very exciting project we're working on at the moment where Sage have an accountancy practice software, so as soon as the accountant logs in the morning, he can see his client and he can see what is that client eligible for. So you can have good conversations with your client, talk to them about their credit health, and move them along the process if they need funding. So a lot to come. I would say we've just started on the journey. But what's exciting about this is if you think embedded finance, you are probably thinking payments being integrated into, eBay or something, or maybe one lender integrated into Amazon. That's not what a small and medium business needs. Small and medium business needs options. They need to understand that they've seen whole of market. They're not taking an expensive loan just because it's embedded within an eBay platform, for example. They need to know they're getting the best loan at the best time at the best price for them. And so what we're doing here is delivering an entire financial services market to a customer based on their data within the software they're operating in. So that's a pretty powerful proposition.
Yeah. And your slogan, isn't it? That you are a company's virtual CFO. I love that.
Correct. Yes.
So, you said yourself that we're very early in this journey. So let's pick up on that. Where are we going next? What are we going to see? What's the vision? What new products have you got? Huge question.
Yeah.
Yeah, I think when I think about where are we heading, and you're right, we are early in the journey. So I call it the walk stage. We're in the walk stage where we have a connector today into the Swoop platform, and the customer has to initiate that on their own, right? In other words, they have to take action. And kind of the next phase of that is, how do you offer that up proactively? And so, what we're thinking about as kind of the run, if you would, past the walk is, how do you embed that as a core feature within your accounting software? So when I log into my software, it's just part of the application that I am using day in and day out. It's rendered right there for me. And then instead of having to initiate a call, wouldn't it be great if it just proactively did that for me? So as I logged in, it went out to the whole of market, pulled data set out of the general ledger, whatever that set was, and then rendered back to me proactively because of a cash flow forecast that I would be short on in the future. It tells me, here's 3 loans that you're eligible for today, and here are the terms. Or here's a grant that you're eligible for because you're in the engineering sector, right? Instead of me having to think about this proactively, it's intelligently, which I'll talk about maybe a little bit in a minute, but it's intelligently, proactively doing that for me. And that's really where I think, who wouldn't want that, right? Who wouldn't want that to help run their business day in and day out?
Mm-hmm. Yeah. I think just picking up on that, we're seeing embedded finance and other generative AI combined together to deliver a powerful solution. And exactly as Chip was saying, where we're moving to now, because we have data, we have over 200,000 customers on our platform globally. And what we're seeing is, what did a lender say were their eligibility criteria versus what did they end up giving the business, at what rate did they give it, et cetera. So we're now building loan propensity models, which means in the future, you will never have to apply for a loan. It will be reversed the other way. It will be you are eligible based on the lender's criteria, so it'll surface within your ERP system, and you won't be wasting those hours searching for the wrong thing. So I think there's a lot coming. Sage launched Copilot, and it was very powerful being in Las Vegas at the big launch of Copilot, and as I was watching it, I was thinking, this is fantastic. It was identifying for businesses where they were going to have cash issues or cash needs, and I was like, okay, I can see us answering that cash need immediately. So it's very exciting where it's going, and it's all conversational, all based on your data. I would say for the industry as a whole, there's a great guy, Andreessen Horowitz, one of the best funds I follow, for example, in the West Coast in the US, and their mantra is soon every company will be a fintech company. And those who have embedded finance within their software, 85% of them have reported an increase in customer engagement. So why wouldn't every company be a fintech in the future? So for us as a fintech, this is a very exciting phase we're going through. This is about new forms of customer acquisition in a more meaningful way. You know, you can acquire a customer by paying for them, etc., desperately try and convert their attention. But if you're living within their system and really solving for their needs in that moment, I think it means the future is bright for fintech.
Okay, just to touch on something you said there, how comfortable are your clients with allowing that full interrogation of their data? Is that perceived as a barrier by some who are not yet becoming fintechs?
We've seen huge shift in customer behavior from pre-COVID to post-COVID. Okay. And we see it also in the demographic of business owners. So what you would have seen in the past is, I'm not integrating my accounting software. I'm not using open banking. Yep. Can you read my data? Are you in my bank account? And so you had a lot of reticence. And we used to have sub 10% of businesses on our platform actually integrating and allowing us to use their data. They were still preferring uploading PDFs, which then we were having to basically read via OCR and deliver the same service because they wanted to upload. Post-COVID, the shift is incredible. I think some of it's got to do with open banking adoption. You can pay your tax bills now via open banking, so people are getting used to it. And so now we're up at 38% with people using the integration. They don't want to waste time answering questions. Now we have seen the demographic of our business owner be younger now. So that's coming. It used to be average 55 years old, white male was the average, the biggest section of business owners. Obviously, as that's coming down, they're more digitally savvy. They expect you to integrate to get the job done for them. So we're seeing adoption is massively increasing since COVID.
I did want to pick out, because you mentioned COVID being a tipping point. Yeah. It wasn't the awfulness of COVID per se, but it has been, or was it, and changes in behaviours, or has it been development of open banking across the world?
Honestly, it was suddenly business owners needed the bounce back loan. They needed the government back lending, and they couldn't get through to anyone in their bank. And the bank's websites were actually crashing with the demand coming through. And so they were searching for other solutions. And so businesses that traditionally wouldn't have used online or used digital platforms suddenly were finding us, and we were able to solve for that problem that they had and get them the access to the bounce back loan. So it was driven by absolute need and crisis. But their behaviour has changed, and that change has been sustained post-COVID. And
facilitated, presumably, by the open banking and the technology that we now have.
I think we saw, I think coming out of COVID, I think everyone would say there was a huge digital transformation. Yeah. And it happened out of necessity, right? It was going to happen, but I think it accelerated because of COVID. And coming out of that, you've got all kinds of new things that are in the market today with generative AI, as everyone's seen, and how it's impacting you in your day in and day out life. As Andrea mentioned, Sage launched what we call Sage Copilot, which is an AI-driven capability to support our customers proactively. So think about today, you know, as a good life use case example of that is, you know, I'm running my business, and through Copilot, it comes back and tells you, you know, you're going to be short on payroll in 3 weeks because of your cash flow forecast that I can tell you about now. So let me go out and tell your accountant about this and set up an appointment for you, right, with your accountant. proactively. But the answer to that is it goes a step further. So think about a day in the life when that happens, but now it not only does that, but it gives you the answer, the solution. It says, you're going to be short on cash. I've gone out to the market. Here's 3 different loan capabilities that you'll have to be able to support that. And by the way, I'm going to set up an appointment with your accountant to help allow him to be able, or her, to help you consult around what's the best choice here. So using new technology that's really driving the market is really changing, in terms of when you asked about customer acceptance. It's reducing the barrier for what they have to do day in and day out and making their life easier.
Any questions from people so far? Can we get a microphone? There's a gentleman there and a gentleman over there. So,
yeah, hello everyone. Thank you very much for the insights. It's really wonderful. My question is, between both of you, who eventually takes the credit risk?
Great question.
It is a great question.
So the credit risk lies with the lender. So we are not a lender. What we're saying is, if you were today to go out without any digital experience, you would go and look for these lenders yourself, and you would individually apply to them. And the worst part is you're applying to the ones you shouldn't be applying to, and you're hitting your credit score while you're doing that. So you can actually negate any loan you're getting. So the lender is still taking the credit risk. We are like an intermediary, a digital intermediary, and we're doing everything through your data to get rid of you having to form fill. So credit risk lies with the lender. Then in terms of the customer experience, the customer support, the infrastructure, that lies with Swoop. But it's a very good question you ask. The other risk that is involved is reputational risk for a brilliant brand like Sage. So I'm sure they have a lot of questions that I know they have a lot of questions. I had to go through them all. There's a lot of questions you need to answer to be sure that embedded finance is the right solution for your software. I don't know what you want to speak into that.
No, I think you hit the nail on the head. Obviously, as a company, we're going to be risk adverse around that question, right? And so we don't want to take on that credit risk. We're not taking on that credit risk. As Andrea said, it stays with the lender. Sage works with Swoop because it's a market. It's a marketplace, if you would, platform. So I don't want to just say a marketplace. It's a platform to get access to multiple lenders across the globe. And it's still customer's choice. We're not advising them. We're not telling them. We're not getting into that advisory role. We're just providing options for solutions where instead of them going out and doing all the work, we're basically doing it for them.
thank you. There's a question over there. The microphone is being passed in that direction. Right at the front, Charlie, please. Gentleman in the green jumper.
The first part of my question was kind of addressed by the last one because, Andrew, with the models you're building to sort of replicate your, I guess, the ratings that the banks are creating, I foresaw this area where you could bolt on a private credit fund onto Swoop and kind of undercut the banks. But obviously you just suggested you're not going to do that. So the way I thought that would be interesting was if with Sage you could almost have an early warning system. So that actually the invoices, we thought there would be X amount of invoices raised over the next 6 months, but actually that hasn't come to pass. Is there a route, Chip, where you think that is possible, where you're kind of providing that early warning system to lenders?
The answer to that is absolutely. And I think some of that comes, as we talked about, through AI, right? So if you think about what AI, generative AI can do, is it can actually do some of that forecasting for you, right? You can see trends, you can see patterns, and like invoices, like you talked about, raising invoices, in terms of it also can solve for situations where you're not getting paid on invoices, right? Where you're expecting that cash flow to come in and you know it's going to be short because you have historical performance of how that customer pays. And so it can provide those types of solutions and answers and get you access to that. You know, one other use case that I just thought about, you think about, you know, for our customers, we have within their accounting record things like their utility bills, right, for how they have been paying your utilities over a course of a year. One of the great things about the Swoop platform is it's not just about loans and access to grants, but it's also about savings. So through AI, we can start forecasting well, hey, through your utility bill, we see that you're paying significantly more than someone else in the same part of the market. And then what Swoop can come in and do is to actually do that analysis and then offer them up solutions to be able to have savings. And that's just one kind of use case through that.
I also see, just extending on your point there, if you think about the lenders, and if you think about corporate lending, so where you have covenants monitoring on a quarterly basis, today everything is Excel based, the lenders are looking, they're doing all their different stress testing, you then get the loan, you've then got 4 to 5 years of covenant monitoring, you've got the accountant doing the Excel spreadsheet, submitting it. All of this is friction, and all of it is hours lost that we don't need to. And one of the use cases of that is Sage have a forecasting tool. We've now built in the templates into that forecasting tool for covenants monitoring. So now we're trying to bring the lenders on the journey to become more embedded as well within not just getting the access to finance, but then monitoring from their side as well. So there's more to go, but I think it's just get rid of hours lost is kind of the general gist, yeah. Exactly, yeah.
We've got a question that's come in from people watching online, and it says, what are the most innovative use cases of embedded finance in the SME market, and how are they disrupting traditional financial services models?
We're the most innovative. As I said, I'm not trying to lessen the difficulty. I'm sure you can talk into it, to integrate a payment solution into a platform, to integrate one lender into a platform. But as I say, that's been done, and that's pretty much the standard of what's going on in the market. To integrate an entire financial services market for SMBs is a difficult thing to do, but I think it behoves us to do it, because it's great that you're giving ease of access to lending to one product if you're on a platform, but trust me, I know it's expensive. That one lender is expensive, and you outgrow it, and what ends up happening is they then refinance to us, or we're finding them refinance. So it's important that we do ease of use, but customer options. They need choice, they need competition in the market. So for me, it's been a difficult road. We're not there yet. We are on the early stages of it. But for me, I think that is it. We have embedded insurance, we have embedded payments, but embedded whole of market is a difficult thing to do.
So the future is exciting.
Yes.
And to sum up, why wouldn't you want cheaper money and to cut your bills?
Exactly.
Why wouldn't you? I've looked at the clock. We've got to get on to our next session. I just want to thank you both, Andrea and Chip, very much indeed for those insights. Thank you.
Thank you.
Thank you.